Hey everybody, welcome back to Layman Loans. In this video, we are going to see what is the difference between secured loans and unsecured loans. In simple terms, when you are pledging an asset, when you are attaching an asset for a loan and then taking funds from the bank, that's called as a secured loan. So secured is not exactly secured from your end. It's from the perspective of the banks that their loan is secured. In case you default or do not pay your loan, they can always encash the entire asset by selling it. So that's what is meant by secured loan in banking terminology. In the case of an unsecured loan, it basically means there is no tangible asset associated with the loan. So if you look for a personal loan or a overdraft loan or a credit card or even a business loan, all these types of loans come under unsecured loans because there is no actual tangible asset associated with an unsecured loan. But if in the case of a secured loan, like a home loan or a loan against property, a loan against securities on your shares or mutual funds, all these types of loans come under secured loans. Because assume you pledge your home and take a home loan or a loan against property, then if you're not able to pay your loan, the banks will sell your home and take that money back. But if you're taking a credit card loan and you fail to pay your credit card, then the banks can probably not be able to sell anything because there is no tangible asset. You just used your credit card loan, and on top of it, you don't have any asset associated with it which is attached to the bank. So the banks will not have any ability to actually sell any property or assets for them to encash the entire loan. So in general, secured loans come at a lower interest rate and a higher term, and unsecured loans come at a much higher interest rate and a shorter term. So secured loans like home loans or loan against property will be given by banks for a period of minimum 15 years or can go as high as 30 years also, 20 to 30 years easily. And the rate of interest also will be much lower. It will be anywhere around 7.5% to about 10 or 11% at max. But in the case of an unsecured loan, what they do is they give you a term of 3 to 5 years at max, and they might even be skeptical and make it to even 1 or 2 years also. And the overall EMI amount will be much higher because the term is much reduced, and the rate of interest will also be higher, like 17% or 19% as such. And your processing fee also will be much higher. So what is a processing fee? Why should they process some fee for them to give you a loan? So if you ask, a bank's job is to lend loans and collect interest. So what is there to process? So if you see, if they want to sanction a home loan, there is a huge due diligence and process in place. There are a lot of departments like a legal department and a banking department and survey department. Several departments have to work in unison and then actually sanction a particular loan. For this reason, they can charge a minimum of 0.5% processing fee and a maximum of even 1 or 1.5% processing fee as well. This is in the case of a secured loan, and you can always renegotiate with the bank and request them to reduce the processing fee. And my humble suggestion to you all is, do not pay upfront processing fee for any bank loan. Always ask the banker to reduce the processing fee with the sanctioned amount. So there is something called as a loan approved amount and then a sanctioned amount. So if you get an approval for 50 lakhs and what you get as sanction will be after deduction for an insurance or a processing fee, and finally what amount gets credited is the final amount what you receive as loan. So you can always request a bank that I cannot pay an upfront processing fee, but you can reduce it from the amount what you sanctioned to me. So this can be done for both home loan, or you can do it for both secured as well as unsecured loan. So this is my humble suggestion, and hope you are clear with what is the difference between a secured and an unsecured loan. Always go for secured loans. Unsecured loans have a very high rate of interest and a very short term to pay. So good luck for you all. And if you are looking for secured or unsecured loan, please do fill up the form mentioned in the comments and description box. We'll be more than happy to guide you on the process. Thank you so much.